And now it's my pleasure to ask Pat Thaker from the Economist Intelligence Unit to talk about post-sanctions Iran. Welcome.
You will see me.
I should also mention, by the way, that the EIU is, I think, one of the very best consultancies in the world. And you've got to keep it that way because what you do pays part of my pension. So it's very important.
I will try not to disappoint you, John.
Thank you.
Thank you. Good morning, ladies and gentlemen. My job this morning is to give you a brief window. You've just heard in the previous session a very practical approach on how to do business in today's Iran. My job is to give you a window, sketch out an economic roadmap of Iran's future. When we talk about future at the EIU, we talk about 10 years, 20 years. We certainly don't focus on to just today or tomorrow. What I'll do is outline the most promising sectors. Most of you know what they are. That's why you're all here in this building. Challenges, and the challenges are huge. You've heard some of them earlier. And what are the struggles that you'll face operating on a very complex market? Iran is keen. There's no question about it. It's keen to make up for very lost time. It's been hit by sanctions at various periods of time, a very important market in the region. And the president you've seen has been very active in recent months, particularly since January this year, when the gradual removal of sanctions took place. He has been pretty busy on the foreign front, drumming up new businesses, Europe, Asia, US. So, it's not something that Iran is also taking lightly. It recognizes it's lost the time, and it needs to be part of this global village that has been unfolding in the last 20 years. So what is in store? I'll give you a brief window into it. If my presentation comes up. Voila. So what is in store? Fast-growing, a fragile economy. It is growing. When you look around the world, what is growing? It's a very unfolding global environment. Iran is coming back on the international stage, or trying to, particularly when the global environment is changing, not necessarily in the right direction. So what does it have in store for it? Certainly when you look at the Middle East, every month when we look at the forecast for Middle East, we're shaving the growth. GCC is struggling, scratching his head very vigorously on how to deal with the low oil prices. Changed environment, China slowed down. So there's a double whammy there. So what is Iran coping with it? What is it? It's going to be the fastest growing economy in the Middle East in the coming years. Don't get too excited though. The numbers are still small, 5.1% average for the next 5 years. Still not double-digit growth. It could be better. It needs growth of 8 to 10% a year to see the sort of changes in regulations and the private sector activity that all of you are anticipating. For the next 5 years, a substantial amount of the growth will be driven by hydrocarbons, oil and gas. This is one of their key natural resource strengths, and this is something they're very actively sealing deals of memorandum of understanding. A number of them has not resulted in actual projects, but certainly a large number of MOUs. It's planning to increase its oil of 700,000 barrels a day by the end of this year, and targeting further gains in the coming years to almost 3.6 to 3.7 million barrels a day by 2020. Unrestricted sales to Europe and Asia. We're assuming here that they're ignoring OPEC sanctions or OPEC quotas. Certainly you will see a lot of the battlefield between Saudi Arabia, the key producers, taking place internally within the OPEC spectrum, not on the international front, but within the oil business. The pressures are rising. This is particularly going back to, keep this in mind, this is all happening when the global environment is changing, particularly the weak oil prices. There's no doubt removal of sanctions. Also, the second area is inflows of capital. Export revenue, FDI, will boost consumer confidence. We've already seen expectations, particularly on the ground, being raised, and also with international players. But the situation is more complex with the consumers on the ground than it seems, and we'll come back to that later. The third area to watch out for is large trade and investment deals, backed by official support, credit lines, export guarantees. Some of the assets that have been frozen, part of it has been unfrozen, so access to credit lines is rising. Not a huge amount, but definitely moving in the right direction. What does it mean? Increased trade flows, investment in certain sectors, especially energy and infrastructure. Those are the two key areas that the government is focusing a lot of its energy on in the coming years. Energy, infrastructure, infrastructure, infrastructure. Fastest growing, as I said, this is with two areas that will support the 5.1% growth. Challenges, there's always challenges. Low oil prices, what does it mean? It is adding pressure when public finances are already stretched. What it will do is avoid any giveaways from renewed oil exports. Pretty tight situation. Banking sector, burdened with very high NPLs and in a very weak position. Exchange rate, official, unofficial, continues to weaken against the US dollar. The gap we expect to be closed in the coming years, particularly over the next decade, but it'll take time. Inflation, another key area investors has to watch out for. It has been easing, but still very much on the high end, 8 to 10% for the rest of this year. Unemployment is also high. For the coming years, we expect the current account to go into deep deficit. Why? Exports are rising, but prices are weak. And the capacity for Iran to boost its oil exports is still fairly limited. It will take time. It takes investment. At the same time, it needs to drive the economy. It needs to spend to develop the infrastructure, surge in imports, and that's going to remain a key feature. So what does it mean? Adds additional pressure on an already stretched financial situation. With that in mind, this is what's going to be attracting much-needed FDI and financing to help the development of the economy. Hydrocarbons, it's a quick win. We're not talking about starting from scratch when we look at the oil and gas industry. We're talking about developing it further where it's been neglected, largely because of the sanctions. It has the potential to be one of the greatest players in the global energy market. It was before, and it can be in the coming decade. It has reserves of 157 billion barrels of oil, fourth largest in the world, an equal amount of natural reserves of gas. By some measurements, the largest in the world. What does it mean? There'll be short-term targets achievable, but in the long run, it will struggle to achieve longer-term objectives and ambitions without substantial FDI and the participation of international oil companies. They're holding out. They're waiting to see how things develop. And as we heard earlier, not all the sanctions have been lifted. It's a very gradual process. And there is also a risk of turning the other way. We have got the presidential elections taking place in the US. Trump. That could be the biggest risk to the global markets, particularly for Iran. We have had him as number one risk, even way above the ISIS. So that is something to watch out for. If Trump comes in, we should all sleep less. So this is going back to also, particularly at a low oil price environment. Forget about the $100 barrels a day. They're not happening again over the next decade. You will have to see a severe political instability in the Middle East to see that of prices hitting the markets again. So pretty competitive time. All right. Other areas, consumer demand could take off. Sanctions, gradual removal of sanctions has eased trade restrictions, increased options, reduced costs. But there's a number of things that need to be done. The consumer market, young, connected population raises prospect of e-commerce, retail. But cracking the market, the Iranian market, is not going to be easy. Sanctions did not mean that there was nothing happening on the ground. As heard earlier, they have got thousands of years of being merchants, highly creative. They've lived through sanctions at various periods over the years and learned to develop its own internal economy. So the consumer market from the local is pretty crowded, and this is where you will be facing stiff competition. However, there is still great potential for more formal retail outlets. Regional players like the Dubai-based retailers Majid Al Fatum Group are already featuring the first wave of investment. So they're at a greater advantage being so close to the proximity, historical, and cultural trading links. At the same time, from the consumer market, you will occasionally, or more even frequently than you expect, face stiff protectionist policies taking place. The shifting of the policies, the regulations, so you have to keep your eye and constantly review what is happening with regulations. National leaders could pursue a policy of shielding local producers with one eye on the political and social spectrum from competition, international competition. Last year, in November, Iran's government introduced a blockade of US consumer goods on the direct orders of the supreme leader. So just when you think it's safe to go in, you seem to have your strategy, you have the right agent, things can shift from the top. The other area, trade. And industrial infrastructure is a key priority. We've seen the policies and the 10-year plan emphasizing the investment, power generation, water supply, air, and rail. High-profile tour of Italy, France earlier this year, Germany, most of the European countries. Biggest single deal was the purchase of 118 aircraft, including 12 A380s. Iran is planning to build 7 new international airports over the next decade. And once again, going back to the Memorandum of Understandings, huge amount within the space of a fortnight was sealed in February and March. The numbers that's coming through as actual project is quite disappointing at this stage. So it'll take a long time. This easy bit was during the Memorandum of Understanding. The hard bit is going to be executing it over the next decade. It intends to invest something like 25 billion to modernize and expand just its rail network. Plenty of opportunities for international players there. One of the key things you need to watch out for as part of the trade route is the concept of the north-south transport corridor. It's a, sorry, beg your pardon. Bear with me. I'm not quite Madonna. So bear with me. This is a very important trade link taking place. It's going to connect Iran to the west and east. East is still growing. Asia is still growing. And they've been waiting in the line for Iran to open up. This is going to speed up the trade links, investment links between Iran and Asia. This is going to link Russia, Azerbaijan, Iran, and India. This was stalled during the sanctions, and it started to make the movement again in terms of development. Absolute priority for the government and the interested players. India has also made moves to build trade and investment ties, including development of port and rail links between the two countries. It's vast. It will happen within the next 5 years. Ambitious other plans in terms of infrastructure, urban, real estate, power, water, everything you can think of. But there's always a but with Iran. State interference in the construction sector in the form of the IRGC and boneyards is extensive. Dismantling that will take a very long time. So keep on top of that. Certainly in terms of the state intervention, what the percentage of their interest is in each project. Population. This is the reason why the consumer market, one of the largest, and it's one of their main strengths as well, and a challenge, like anywhere else in the world. Is it a dividend or is it a risk? We'll see both unfolding in Iran in the coming years, if not managed properly. Population of almost 80 million is expected to grow fairly slowly to 2030. Large labor force of almost 30 million last year, and will grow slightly faster pace in the coming years. We forecast a modest pace of growth will add an extra 9 million people to the population by 2030, as you can see, and hitting 13 million in terms of the labor market by 2050. Young, very young. But at the same time, rise of Iran's cities, tier 1, tier 2 cities. Urban population rate was last estimated 72.1%. That's around 55 million in 2013 and 14. It will continue to rise in absolute terms, and possible political strain will rise as well if the jobs are not delivered and the development does not take place. Anticipation is high. Expectation is high from this rising young population. Well-educated, one of the highest educated labor market in the Middle East. And we're not talking about social workers. We're talking about technicians, engineers, doctors, highly skilled, but not well-trained. Strong skill set in hard science, but gaps in middle management. Strong competition for a small pool of managers who require lots of training and are difficult to retain. It's much less of an issue, like I said, in retaining technicians and accountants and engineers. So lots more to be done there as well. This is a numbers game. You cannot really look at the Middle East, you cannot look at Iran, you cannot look at Saudi Arabia and UAE without looking at the numbers. Who's keeping awake? Which country is staying awake with Iran coming back to the international market? UAE and Saudi Arabia, the big brothers. They've had a free ride, politically, economically, both domestically and in the international market. They're nervous, very nervous. So what does it mean in the longer term? Yes, Iran will grow. You can see all the strengths there. We've already touched on them. Natural resources, educated, large, young, growing population, diversified economy, and we'll see a little bit more of that later. Huge constraints as well, and this is the constraints that will play a bigger role unfolding in the coming years, will not make it the top economy by 2050. Nominal GDP in dollar, we forecast, PPP, will rise strongly, but lag behind in GDP per capita terms. Still half of UAE and Saudi Arabia by 2050. And like I said, if it wants to be number one, it has to grow by 8 to 10% and dismantle those heavy, centralized regulations. So which are the partners? All the investors. I mean, really, look around the world. What is emerging? China's slowing down. India's growing. Out of the BRICS, only 2 countries are rising still, or growing reasonably, India and China. Russia, let's not even talk about that. Brazil, struggling to get up to its feet from 2008 and 9. Forget about it. When you look around the world, there's a slowdown, and this is one of the emerging markets. There's a huge cautious note attached to it, but nevertheless, it is the one to watch for as one of the rising markets in the Middle East and around the world, for all the various issues that I've just raised as well. And this is the reason why investors are looking at it. Whether it's your first next 10-year program, but it certainly should be part of your Tier 2 investment strategy. Do not ignore it. It has its regulations, constraints, and challenges, but it's still a market. So it's actively promoting specific sectors. Oil, mining, steel, infrastructure, we've touched on a number of them. However, we've also heard the US sanctions, residual US sanctions, primary sanction on US-based individuals and entities will remain. They're not going to be dismantled quickly. And also at the same time internally, from Iran's perspective, high cost of due diligence, controls and compliance on trade and investment deals. It is the sanctions that's also going to be making operating costs higher for you. Due diligence is, I cannot emphasize for you strong enough. It's not something you do once for Iran, you keep doing it. You keep monitoring the sanctions, how they're doing, what does it really mean for trade, financing, and how the heavy fines and penalties. A number of banks, HSBC has been caught out with that. They burnt their fingers badly there. So it's something to watch out for. Major issues and obstacles, you do need to keep track of it. Okay, assuming things remain more or less on track, with some fallbacks, over the next decade, you can see from that chart that I've put together, high and low. Out of all the sectors, the one that's likely, not just likely, will take the longest to unfold is banking. All right? Great openness. The government is saying all the right things, want to create the best foreign participation environment, dealing with regulations, but progress will vary according to each sector. It's not a blanket. A lot of the regulations are there. Foreign investment laws are there. How they work in reality is very different by sector to sector. Okay? Structural impediments to progress in the business environment will take a very long time to overcome. Beyond the oil and gas, sectors are expected to present and make progress are, for instance, consumer goods, auto sector, largest industry in the Middle East, accounting for currently about 10% of GDP. Lots of room for growth there. And we can see a number of first movers are making deals from both Germany, France, Italy, and Asia. Korean cars, Chinese cars are already there. When the sanctions were hitting the Europeans and the Western companies, Chinese companies were doing joint ventures with the local auto sector. So they've got a street ahead. And Iran is going to remember who their friends were during the sanctions. And they will exercise this power in the business field. It won't even be discreet. You will see that unfolding as well. However, there's a number of sectors that will be very much open for business as well, and great opportunities. Going back to the financial sector, this is the one area that will struggle. Without a very sound, highly regulated financial sector, all the other sectors cannot function to full capacity. You need the money. You need the money that can go easily in and out, and it meets Basel I, II, and III standards. Your operating offices are still in the West. They're not in Iran. So you're accountable for what's going on by the US sanctions and also your European headquarters. This sector. Okay, I've gone 2 minutes over. 3. Bear with me. It'll be worth it. Sure. It's battered by years of mismanagement. 16% of total loans is NPLs, a large chunk of them with the individuals, political individuals and state companies. So this is also a promising market in the future. Okay, I'm coming away with my takeaways. A complex picture is emerging, there's no question about it, but I always like to end with some key takeaways. As you can see, there they are. Re-engagement, uncertainties, potential for trade investment boost, agreements, but obstacles are there. Despite that, you'll see a lot more agreements. Positive outlook for long-term opportunities. Getting started is still very difficult. What is the bottom line? International companies seeking to take advantage of this market with a wide number of opportunities must weigh up the risks continuously of dealing with a political and administrative system that has undergone some significant changes. We're seeing a new face of Iran, but that also has powerful undercurrents of continuity. And even with Iran's doors thrown open, it would be wise for businesses to keep in mind the ancient Persian proverb. He who wants a rose must respect the thorn. Thank you very much for your attention.
Pat, thank you very, very much. I should be the thorn. I'm sorry, you're the rose.
That's okay.
Questions, please. Gentleman there. And then gentleman there. So 1, 2. Microphone is coming, I think, and 3 there.
Okay.
And 4 there. My goodness. Yes.
Thank you so much for this enlightening insight. My name is Joachim von Hallers. I'm a co-founder and partner of Reconnect Iran, a communications consultancy who's operating with offices in Tehran, run by my business partner, Ayla Mekki, and I'm based in London. We're advising Iranian companies like Afranet, one of the most successful internet companies in Iran, on their global media relations, and we're advising European players like Sturgeon Capital on the positioning in Iran with their Iran fund. I'm just coming back from 10 days in Tehran, my second trip this year, to the capital of your beautiful country. And my question is, I saw many more delegations from abroad, especially from Switzerland, from the Swiss Chamber of Commerce, amazingly well-organized trips and delegations who visit Tehran last week. Could you give us an insight from your perspective, which European countries or Asian countries or American delegations are increasingly visiting Tehran? Do you see an increase of certain nationalities? I saw Germany and France and Italy on your presentation. If you could enlighten me.
Okay. Can you hold that question? And then the question here. So if we take them all together, we will possibly save some time. Yeah.
I'm Michel Makinski, General Manager of Jeromis. We are advising French industry. I have 2 very short questions. First, could you kindly give your assessment on the newly issued resistance economy plan which has been issued by the guide? Can we understand this as the B plan in case of failure of GCPOA or a mix of other things? And second question is, how do you assess the competition between Pakistan and India with regard to the oil and gas projects and pipes? Thank you.
Okay, thank you. There was a question. Can you want to take those 2? Then there's a question there and the lady here.
Okay.
Yeah.
Shall I take?
So, yeah, please take those.
Okay, going back to the first question. Yes, you're right. There's a number of delegations taking place by European countries, less in UK, of course, and less in US. The sanctions are still very much in place. You know, US and UK are late entries. They're missing out on these opportunities. And certainly they're piggybacking on going with the European delegations. And you have to ask yourself, why are there so many European delegations taking place? Because you're just still feeling the market. It's still opening up. And some of the areas that I've covered and the earlier session covered will very much stay over the next decade. You just have to make sure that you keep reviewing it. You go for 10 days, great start. You have to be on the ground longer to see what's unfolding. You cannot operate a complex market like Iran and try and build up a strategy over 10 days, go back and say, this is where we want to be, this is what will work. No. You need to bring your lawyers, you need to bring the regulators. It is unfolding in many, many ways. Politically, it's a very different market. Iran is showing a face of open for business. Please come in. But you also have to remember who is holding the strings still. Politically, they're also part of the business world. The Islamic Revolutionary Guards are very instrumental and operative on the ground in a number of areas. So this is where your delegation has to take into account. Yes, Germany, France, Italy, but what is interesting to see is a number of these countries are not just going once, they're going a number of times and reevaluating it. Okay?
Gentlemen.
Going back to the questions of, what was it?
It was Pakistan and India,
Okay.
and there was a... The
plan of economy of resistance issued by the supreme leader, is it the B plan?
I don't think I can answer that one about what the Islamic leader is going to unfold in the coming years. It's very changeable. However, The second question was about what's the position of India and China.
In Pakistan.
And Pakistan. If you look at the trade route that's been marked out, North-South corridor, that is connecting the countries in Asia and the Indian subcontinent in a number of ways. It's not only going to be a trade link, it's going to be strong trade links, and it's going to develop with better political relationships as well. During the sanctions, there were barter deals set up between India and Iran and China, based on their energy need, but also with anticipation that things will shift on the ground. There was a patience game there, but they made sure that they had their foothold there.
Okay.
So,
There was a question over there, and then the lady here. Yeah.
My name is George Biskov, G&G Group Financial Services and Money Transfers. Two practical questions, if I may. We talked about consumer markets in Iran. What about consumer finance? Does it exist at all as a phenomenon? And if so, who are the major players, the banks or the retailers themselves? And
It's
the second question
combination.
is, if 100% foreign ownership of the banks or other financial institutions is allowed in Iran? Thank you.
Okay, and the lady here, is the microphone just? And then gentleman there.
Thank you very much for a great session. My name is Parveen Samani, working for Market Access Allergan. My question is, I missed the situation for pharma medtech in Iran in your presentation. What do you think, how ready is the market for a startup within this session, pharma and medical device company in Iran?
pharmaceutical.
Pharmaceutical.
Oh, there's
Okay,
great opportunity.
1 second, just let's take the question here as well.
Thank you.
Thank you, Pai Ian, Private Equity Investment Advisor. Many on the ground and within the Iranian leadership, not necessarily just the quote-unquote hardliners, are concerned at this fairly early stage about general incentives and wish to avoid a redux of what happened post-Soviet entry into the virgin Russian market and what resulted over the 90s. So what general guidance is being given to Western corporations with regard to sensitivities in building trust so that there's a balance between modernization, guidance of the economy to develop without any semblance of a threat for resource appropriation or currency volatilities, extremes of wealth and poverty and whatnot?
Interesting question. So 3 was consumer finance, startups, and what happened? Is it going to be like post-Soviet Russia?
Okay. Going to the finance question. Like I said, the banking sector is a mess. And the role of the state is very large across a number of areas. Now, the consumer financing from the ground is fairly limited, but there's a number of operating banks, the local banks. Liquidity is tight, and this is where it's very much a cash flow economy. How will it shift? I think it will shift in the right direction when regulations take place, the right regulations, to support the market as well. In the interim period, what you will see is a number of initiatives which will be locally driven on the back of technology, e-commerce, e-payment, PayPal. And that is what is unfolding in terms of the consumer market driving the finance. Right? But it'll take a number of years before we see a more sophisticated market developing to support the consumer market that we're talking about as well. Okay? In terms of, I think it was a pharmaceutical. Startups, well, basically, everything the first session pointed out. There's a number of ways you can start up on the ground. No one recipe works. It very much depends on the sector you want to go into. Pharmaceutical, huge opportunities, but stiff competition also coming from Asia, particularly from India. This is one of the key areas where India wants to develop in Iran as well, to penetrate the market there. Okay.
And then...
The comparison between Russia and Iran? I'm not sure that the supreme leader would like to be compared to Putin. But sadly, in terms of operations, yes, you're right. Yeah, it's basically, things can shift. And I think the investors, this is where the international oil companies are still holding back, the large ones, waiting to see how the sanctions unfold, how serious is the government in changing the environment on the ground to make that uptick in terms of investment. Confidence, they have to build that trust and confidence. But at the same time, investors cannot ignore this market. You still have to look into it.
Pat, thank you very much. I'm sure there are many more questions, but we simply don't have time because we are well over time. But thank you very, very much. It's terrific. And I know you compared yourself to Madonna.
I wish I had
But
money.
don't trip up, because you remember when Madonna tripped up on the steps, leaving whatever it was?
I expect you to catch me.
I will, of course. Pat, thank you very much.